Okay, officially welcome to the market wrap session of the Market Watch group. My name is Scott, and I will be your host. Recording has started. Let's go through our typical intro slides. Here's our disclaimers. Educational and illustrative purposes only. There's no recommendations. There's no guidance. We're not brokers. We're not advisors, right? We're all here to learn as the market teaches us. Here's today's agenda. We'll see how today the market did based on the stronger than expected jobs report and how it might influence the market with its Fed crack addiction, how it thinks the Fed is going to interpret that information. What's the Fed going to think about it? I don't know. Will he like it? Will he think it's pretty? We'll revisit our market posture. Is it going to get better or worse? Because that might help us understand our mindset for trades. Are you going to take profit now? Are you going to shut it down? Are you going to let it run? Or a combination of a little bit of both? Sell some, tighten stops, let some go. Let's see if we can get any information that'll help you make that decision. What's going on next week is a question that we're going to ask. The answer is inflationary data. Plain and simple. We have CPI and PPI numbers. We know the Fed is going to be paying very close attention to that. What else? That's mostly it for next week. Our trade list. Yeah. I thought there'd be a little more. I think we'll see, right? There seems a few financials. Maybe we'll see what else there is. And we are wrapping up Section 7, processing your analytics. We now have analytics. We now have weaknesses. And we now have, hopefully, observations. 3 different sources of information that we can try to use to help us find improvements. What will make us better? Right? That's important for us, for sure. Okay, let's get into all that. Okay. Well, you can see what we have here today. We have a doji. It opened a little down. It sold off. Looked like it was gonna turn over. Then it rallied up, and it's like, hey, look at us, we're bullish again. And then it's right back down here. That's the tug of war. That's the tug of war. Sellers opened it. Buyers had to run. Sellers had to run. Where do we finish? Pretty much flat. How'd the volume do? There's not much there. Average is down to 47 million, first of all. Back here in January, our average volume was around 83 million. Over here, we're down to 47 million. Significant drop-off. And we're sitting at 27 million with 35 minutes left. We'll be lucky to get to 35 million shares today. So not much there. We said, hey, it doesn't have to have volume to move higher. Well, it does if we think it's at resistance, right? When it starts to be like, okay, now we're hitting resistance. Now you need a breakout. If it's at resistance, it needs to break through that resistance. And how does it break through something? With volume. From a probability standpoint, right here, the expectation is definitely that we're hitting some resistance. That should be taken into account in the way you're thinking about what you carry and what you adjust for your trades. So, okay. Now, what else? Well, from a posture standpoint, right? Well, let's look at the market real fast. Let's go through some things. Job surge to reignite Fed debate. Should they or shouldn't they? They're not going to. They're not going to this year unless the inflation drops. Next year, they'll do it if it hasn't dropped, but they start to get scared that we're stalling, right? With the VIX this low, the market is not scared. Why is there less? Well, less scared doesn't mean it's just going to always go up forever, right? It's still going to ebb and flow. It's still going to cycle. So it's gonna have a buying cycle, and it's going to go up, and then it's going to hit resistance, and then it's going to have a selling cycle. So all it means is the buyers are done here. We're going to start seeing some short-term traders taking profits, and that puts a little pressure, and then it puts a little more, and then it pulls back. But as long as the overall sentiment is positive, it's not going to pull back very far, and then that's going to create the next window. So it's not at all concerning. In fact, from a market posture standpoint, right? From a market posture standpoint, that's not it. First and foremost, the long-term trend. We've talked about, like, has it done enough? Is it doing enough? I don't know. I would say no. I would say it's fine. The score I have now is fine. But the short-term trend, over here last week, we scored this as a higher low. This low, which was finally confirmed last week, was higher than this one. Well, here's the deal. We don't know if it's a higher high yet or not. Meaning it hasn't dropped, but it's already exceeded the previous. So in that regard, we do. It's the highest high yet. I'm going to give it the 1/4 point now. I'm not going to wait. What that means is that if it goes a little higher next week and then pulls back, I'm not going to score it again next week. I've already scored the higher high, but I'm going to score it. So I'm going to put that in. My market posture on Sunday is going to improve. It went from a 1.5 to a 1.75 last week because of the higher low. It's going to go from 1.75 to a 2. And then that's it. And then I like it too. Right? Now, here's the thing. If I were to draw a couple of lines. Nope, I don't want that. I want channels. If I were to come through here and say, there's the bottom. Oh, there's the top. I don't know, actually. Does that look like a 2? I actually think that looks like a 1.75. Even though it's a slightly higher high, I actually think the fact that my 1.75 is representative of the current line, I'm going to leave mine alone. I thought I was going to raise it because of that, but I'm like, nope, this is a 1.75 channel. But the past 2 weeks, our volume has hardly done anything. 4 or 5 weeks ago, there was plenty of volume. The major market should cancel out your short-term SPY going. I don't know about cancel out. Remember that volume is, there's no set pattern. All we're doing is reading whatever we get. If it's balanced at low volume, I don't care still, right? As long as, right now, my volume is still slightly positive, and it's probably going to stay that way because the only positive volume we've had recently was buyers. So this little spike in volume alone will keep my volume at a 0.25 for at least another week or two. That's without anything new coming. So my volume is a 0.25. I don't need volume. I'm at a 5.5 without it. I don't need it. I'm bullish without it, right? So we don't want to find ourselves associating a negative bias with a lack of volume, right? If it was negative, you would score it negative. It's not negative, so don't let your bias score it negative in your subconscious While you're like, oh, that's neutral. Well, then let it be neutral. It neither helps nor hurts, which is fine. The rest of the analysis prevails, right? So if you look at my score right now, I'm a 0.25. I was a 0. But before that, it was negative for quite a bit. So I'm basically saying, look, my long-term score is good. That's the current trend. 1.5 out of 2. Solid bullish trend. My short-term, solid, nice, good, steady short-term trend. Volume, slightly positive. Doesn't need to be, but it is, just slightly. Major market, we'll see. Steven's warning me that it might drop. He was been pretty accurate. We'll see. But the Dow hasn't really done anything that would make me feel like it's going to pull back. The NASDAQ, if anything, it's at least a 0.5. The NASDAQ, the technology leading the way it is, there's no way it's less than a 0.5. We haven't seen enough strength from the Dow, and there's way too much strength from the NASDAQ. The only consideration is what is the Russell doing? What are the small caps doing? If there's any strength with the small caps, I'm still going to be a 0.75. Right? I'm still going to be a 0.75. Sector rotation. Technology is a leader still. Communication services is a leader still. And financials is a leader still. I think that at this point, utilities is starting to ease. If anything happens, if anything happens, the sector rotation is going to, in my opinion, improve. We'll see. That's my opinion. That's just my opinion. And lastly, let's talk about the VIX. I think we're going to be unchanged at 5.5, which is a solid score, 5.5. We can't get spoiled because we saw 6s back in December, January, February. Yeah, that was a great market. You saw that was a great market to trade. Always people look back and they're like, oh, I wish I would have done more. Well, look at your score. If it was a 6, ask yourself, why wasn't I doing more? I was a 6. That's strong. That's a good market. Trade harder. Get your chips on the table. There's a bunch of rookies at the table. Let's step up our game a little bit, right? Okay. Lastly, the VIX. Okay, so let's see. So as of right now, I think I'm going to be unchanged or possibly a 1/4 of a point higher. Now, the last thing here is the VIX. The VIX, for me, has been a little bit cautious of a potential hedge trade developing, but it hasn't. It hasn't. It just keeps kind of grinding down. So is it still potentially happening? Yes. What's potentially happening? This was my... No. Why can't I draw? It's so weird how... Let me reset this program for just a second. Billy Ray is here. Good to see you, sir. So, Billy Ray, you are very important to me because you are new to trading. I want to, really get a sense of, is this helpful, right? Or what? As we implement some new things that are supposed to help get you comfortable onboarding, we're trying to limit the amount of feedback where people say, this is too advanced for me. It shouldn't be. It shouldn't be. There should be a path that allows you to get in and catch up and not ever feel like it's too advanced, because there's always a beginner's path for you to take. Getting him before he develops bad habits. Bob, you're exactly right. I know I had a lot of habits that I had to work on. Years. It took me years to fix some of those habits. Yeah, here we go. This was my old low. This was my old consolidation line. It broke out. Boom. Higher high, right? Always that same type of a construct. Yeah, so Billy Ray, closed mouth don't get fed, right? Let me know. Let me know what we can do, what's helpful, what isn't. Higher high, then what? Well, now all of a sudden it's pulled back, but it's got a long ways to come because right here, where we are, this is a higher low. As of now, we don't know if it's a higher low. In fact, I said today, at one point today, where this was right there, the tip of that candle, if it stayed that way, I was going to hedge. If that's what it looked like at the end of the day, I was going to have a hedge on. Bam, just like that. But what happened? It didn't stay that way. That's why we have 6.5 hours in a day when the market's trading. What did it end up doing? It ended up coming down a little lower. But is the concern still there? Yes. If I have a doji on Monday, a nice little doji candle like that, a little plus sign spinning top, and then on Tuesday, boom, it gives me this. You're going to see this thing down here turn, just like it did back here. You're going to see that type of a turn, and that's the higher low. Great call out, Bob. What we're working on here, Billy Ray, is the VIX. This is like a magic indicator. This is a window into the soul of institutions. They hide, they cheat, they manipulate, they steal, they intimidate. They do a lot of things. Some things they cannot hide. And when they hedge is one of them. And as they hedge, they create movement within the options market that we're able to interpret as fear or confidence. A lot of people misinterpret the VIX. I'll hear people say, I'll say, you know, are you comfortable with the VIX? They'll say, yeah. I'll be like, tell me about it. They're like, well, it's kind of a put to call ratio. And I'm like, if you ever start a definition with kind of, it tells me you're not really sure enough to even try. It doesn't have anything to do with the put to call ratio. It has a lot to do with order flow, supply and demand of options, and recognizing that when institutions start participating, it creates an immediate imbalance. So if they're hedging, they're buying. And if they're buying and there's an imbalance, what do we see? We see it break up and escalate. That's an institutional footprint that we're looking for. Okay. We're like, is that the heel? I think I see the heel. The whole foot hasn't stepped down yet, and it might not. We might be like, oh, no, you know what? Must have just been a little wind or something. I don't know what that was, but it's there. The setup is there. I don't need a hedge through the weekend, which is great. I'd rather not. Subjective language doesn't work in trading. Subjective language, right? Yeah, I agree. Kind ofs, sort ofs, maybes. Never. Ambiguity is the enemy of repeatability, right? We can't have like, well, sometimes I do it this way and other times we have specific rules. If it's not standardized, it can't be improved. It can't be measured. That's one of your first objectives, Billy Ray. That's why the trading plan is there. Standardize everything we do. We standardize how we analyze the market. We standardize what we do in the morning, what we do in the afternoon, what we do at night. Standardize our trading rules, our risk management rules. And when everything's standardized, we say, okay, is it working? And then when it's not, we find the areas that aren't and we improve them. And then that just gets you into this cycle of continuous improvement. It's only a matter of time, I believe. It's not like, hey, are you going to make it or not? If you stay, if you commit, it's a matter of time. It's an engineering process. It's the scientific method at work. It's not like, hey, are you smart enough to beat the market? You're not competing with the market. You're competing with yourself. and maybe to some extent everybody else, but not the market. Blades of grass don't compete with lawnmowers, right? Like that's not really a apropos metaphor. Yeah, so I think we should all be very careful and cautious of what we see here developing on the VIX because it is absolutely representative of potential escalation on behalf of the institutions. And if they get nervous, we get nervous. Period. Right? That's it. Okay, so we'll pay attention to that. I'm going to rattle through the watch lists. Comfortable with that, everyone? But as far as my score goes, nothing new. We dropped it last week for this higher high. We don't know if this is a high or low yet. For all we know, next week, this thing could drop the next 2 days and we're right back where we were. And it's like, okay, no harm, no foul. Hopefully you carried some bullish trades during this time and made a little extra money on them. All right, let's get to our watch list. That's what we need to do. That's what we need to do. I feel like the market actually makes some sense right now, which sometimes is a little scary in and of itself. Let me ask that question. How do you guys feel individually? How do you feel about your read on the market? Do you feel like, yeah, you know what? It's not ideal conditions. I recognize that. But what conditions we have, I feel pretty comfortable in finding them and interpreting, right? If you've ever watched that show on the Discovery Channel, The Deadliest Catch, where they're out in the Bering Sea catching crab, and they're like, we're on the crab. That's what I think about, right? I mean, when you're on the crab, it's not like it's always the best, but it's like, hey, it's steady. That's on the crab. It's good. You got it. You found it. Have you found the pulse of the market? Do you feel like you understand the lawnmower right now? Which direction is it going? Who's pushing it? How high is the blade set? How fast are they going? If we understand that, we'll figure it out. So we know, is it time to stand up, catch a little sun? Is it time to duck? Be a little more careful. It looks like the lawnmower might be about to come our way. But looks like means it hasn't yet. Okay, watch list. I'm going to lose chat for just a minute as I crank through these. So bear with me. Apple. Apple's finishing here at the highs, right? It's looking to overbought. It's back here, taking profit here, closing here. Not like, oh, what now? What? Not for me, anyways. AI. Come on, don't slow us down now. AIG. I don't love it underwater. I think there's better financials. AMD, it's a little sideways right now, but I would say that's viable. If you feel like you've missed some chip stuff and you want to try to catch something, I think AMD is enough in that upper circle, that upper echelon, that this is viable. Amazon, I'm iffy on Amazon. I'd want to see a little more. I'd want to see a little pullback maybe. AXP, I like AXP. I think AXP is viable moving into next week. It's not phenomenally strong through here, but sometimes it just goes a little sideways, and then when it gets back to the 50, bam, we catch something. So yeah, I'm looking for that bounce. I like AXP. Give me your thoughts. Boeing, I might not feel funny because I called it out. I'm like, yeah, this looks like a great trade if you're willing to trade Boeing. And so you might say, oh, Scott, so did you take this trade? No, I said at the same time, I said, I'm not willing to take Boeing. I just don't want to. I don't like it. I don't like the way I think of the company based on, a couple of things. So I'm like, yeah, screw it. I'll watch it, but I'm not trading it. But made the move. Anyone pull the trigger on that? Let me know. Let me know. BA had a successful space flight. Oh, okay. Okay. BAC, I think, is pulling back, potentially setting up. Same with Citi. Look at Citi. Right there, sitting on the 50. I think it's viable. I think you have a viable potential trade there. Caterpillar. Caterpillar. I don't know, you guys. I'm thinking it might be close to dropping this thing. I think there's better representation. It is Caterpillar. It is always such a stalwart of the industrial sector, but I'm not loving the way this thing looks. To convince me if you think I'm wrong. Colgate made a move. It's not getting to a new high. A little sideways, running out of steam. I'd be cautious with something like that. I'd be taking at least half off the table. CMG. Ooh, it was looking strong. And then all of a sudden here, end of day, we end up with an engulfing. You can see that the sellers just came smashing in. I've already told you, for me on this one, I'm waiting for this split. It's only a couple of weeks now. NVIDIA split is next week. It's going to change the dynamic of these behemoths. I absolutely think that. COP, there's nothing in oil for me anymore, that's for sure. That was my last attempt right here. I got in, moved a little. By this point, my stop was tight, triggered it right at the bottom here, took a small loss and said that was the end of oil. And yeah, I feel good. Sure was. It was down another almost 20% from there. Costco. I love Costco. I want to trade it. Unfortunately, since the earnings, it just sort of took off. Now I'm here watching it be overbought. I'll wait. It'll pull back. I would say anywhere between 788 and 815. Nice range. CRBG, I don't know. I'm unsold. It's been a week and a half, just kind of sitting around this 50. Can't really get any momentum. The longer it sits there, the more likely I think it's not gonna do anything other than sit there, or perhaps turn around and go the other way. Okay, let's keep going. Delta. Yeah, it looks like Delta is kind of sputtering. The Dow underwater but below the 50. EQH. I think EQH looks very strong. I like EQH. Very strong. FCX looks pretty good overall, but it's really kind of fluttering around the 50. So I don't know. I mean, the trend is still good, but well, I'd want a little more confirmation that the buyers are coming back in. GBTC looks a little overextended. Finished the day in a big bearish engulfing pattern with increased volume, mind you. Average volume is 5.2 million. We got up to almost 6.7 million, so a good chunk of extra volume. GE, I think GE looks good. I think you could pull the trigger on something like that, you know. I wouldn't want it to break support, but I would have that. GLD got hit today on volume. Gold down 3%, I think, 3.5%, yes. Google, Google fell apart. What does that tell me? It tells me it hit resistance, and so if I'm in it, or was in it, not so much anymore. HIMS, overextended, waiting for a little bit of a consolidation. IWM, waiting for consolidation. KBH, maybe bouncing, but it's got earnings, so no. I finished, yesterday and today. This one's over, not looking to carry anything through. Why? Well, look, it's rolling over. This is pinching. It's Friday. Absolutely no need for that. Meta. Meta is pushing a little bit higher. I'm willing to trade it, but at this point, I would say it's overextended, needs to dial back a little bit. MFC. As far as I'm concerned, this is the strongest of insurance companies within the realm of the financial sector. Yeah, I think it looks viable. I'm a little concerned that the stochastics has turned up like it has, but we haven't really seen a lot of buying pressure. I mean, it could be a late starter. I like it still. 3M, same kind of a deal. Looks good. Had a little bit of a hiccup, and then now it's starting to go again. Morgan Stanley, viable, strong. I like this from financials. So there are some financials. There are some signals developing for us still. Microsoft kind of sputtering. Micron, maybe starting to get going again. We know there's momentum in chips. Netflix, a little bit sideways. NVIDIA. Hard to know with a beast like this. Not much to do with it now. QQQ. Okay. I mean, the Qs look bullish. It's just looking like overextended, and it needs a little bit of a pullback. RTX looks bullish, but overextended, and it needs a pullback. SPY looks bullish, but maybe a little overextended and could do with a little pullback. So what do we want here? Patience. Let's be patient. Right now, you're managing more than you're thinking about entries. We can't do both. We're not doing both. Minimal thought about entry, mostly focusing on entries, thinking about your hedge. Yeah? Am I wrong? I don't know. You tell me. What are you thinking about? What are you trading? 5 positions in gold this morning. Okay. Love it. Love it. Hey, John, I didn't see you before. Welcome. Good to see you. UUP, the dollar. Oh, you guys, this is a little bit interesting here, right? Because we're like, oh, look, we're looking for it to possibly break down here, and that would be very bullish for us. And then all of a sudden, we're right back up at this one. And if it breaks up this way, that's concerning. Periods like this are where we're like, ooh, that's not great. That's not great. Here's the VIX. Where did we finish? Nice and low. No concerns. But also it's not going to get scored for anything, right? We'll talk about it and we'll see. VRT, I don't know. That's looking more of a sell-off and less like a pullback. Had it finished this, had this worked out, good. That's what it needed to do, like it did here and like it did here, but that's not what happened. It's looking a little bit more iffy. Wells Fargo, a little iffy. Walmart looks strong. Today it's selling off. Great. I would love to see if this thing can stabilize around 63, 64. Give me another opportunity to catch it and get in. XLB. Iffy. XLC. Yes. We love to see communication services moving back in. That's technology's right-hand man. Energy looks low. Nothing there. We like that. Financials looks good. Third position. Industrials, not great. We'd like to see that get a little stronger to move into a fourth position. Technology, good. Staples, still a little bit too good, but we did have a same high. Same with utilities, where we're like, wait a second. Maybe these guys are losing a little momentum. So, Stephen, for me, that's where I'm thinking to myself, hey, maybe this thing's turning around a little bit on the sector rotation. Healthcare, pretty strong. I don't trade a lot of healthcare. And Zim Integrated Shipping. Are these guys industrials? I forget, but I look at that and I think to myself, hey, that looks valid. That looks viable. That might be something I'd be interested in trading. So, all right. Well, there it is. Remember, lastly, that we are finishing up with the dashboard feature on the MarketWatch log. This is your analytics. As long as you filled out your log, your entries, then and I will be putting in, I've got some more work this weekend on Discord, some great new ideas. If you didn't sit in the brainstorming session, amazing ideas, a lot of cool things that are going to be very helpful. I'm getting buy-in from the powers that be. This is going to help inform us as we move into section 8. Section 8 is improvement strategies. This is where we set goals. Billy Ray, what should your first goal be? Make sure that you participate in the next pass. It's a 2-month process. Every week we spend 1 week working on the trading plan. So you'll be able to come in and say, oh, I'm working on personal info. It would be nice if I had some help with that. Oh, great. I'll give you links to videos about this section and what you should be thinking about and how you can define it. And I'll give you a link so you could look at a predefined sample plan. So you can see, hey, what does a trading plan look like? Give me a sample so I can have a starting point. Okay, great. We'll do that. I'm gonna try. I'm gonna get Gary and I'm gonna get Glenn to try this next iteration on our trading plans. This next versioning of us making a better version. We're all gonna really push to work together. So for now, one more section that we're gonna move into next week, and that's trading goals. I always say at most 1, but I'd rather you have no outcome goals. Just focus on the process, right? Focus on the process. How can you lose less money? How can you improve your signals? How can you improve your plan, improve your routines, improve your knowledge, improve. Get better, mo better. All right. Fantastic. It's great to see everybody. I hope you have some plans for the weekend. I hope you're not too far west. The further west you are, the hotter it seems to be. My air conditioner is working overtime. Oh, there's the closing bell. I will see everybody on Sunday at 11 a.m. for Market Posture. We'll look at the conditions and we'll see what we think. We'll create our short list and we will get ready to go. Yeah, there it is. There it is. Okay, it's great to see you guys. Let me get back. I'm not sure if you're chatting to me or not. I can't have it up. There it is. Bye, all. Thanks. Thank you, Billy Ray. Thank you, Sandy. Thank you, Bob. Good to see everyone. As always, my friends, happy trading.